Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, May 9th, 2011, and this video is sponsored by Realtic. All right, folks, let's get right into the mix today. I want to cover what the markets are doing. We are seeing the markets trading higher today, with the Dow Jones Industrial Average trading up about 73 points, NASDAQ up 20, and the S&P 500 up about 7.5. That's basically 0.5% with the technology-laden NASDAQ leading the charge. Now, as you can see, the market started out kind of sideways here. We chopped around for a large portion of the day, ultimately starting to get a little bit of a bid, and this is where the move came and where you could tell the move was going to come. Now, you might say, well, how do you know that the market's going to make a move like this? Well, what you're doing here essentially is reading price, pattern, and time. And if you can read those keys, then you can tell exactly where the market is going either intraday or on the daily, weekly, monthly charts. Doesn't really matter. Now, again, just take a look right here, folks. The market start out by chopping sideways. Then you get this 1-2 bar surge to the upside. In fact, it's a 3 green candle move. 1, 2, and 3. Off of that green candle move, you close above the 20 moving average and you begin to make this sideways consolidation pattern. Now, for those of us that know pattern, we know that this is clearly a in spirit of bull flag. All right, so again, upward move, sideways consolidation, 20 moving average is sloping up, which is not pertinent to the flag position, but it just adds to the possibility this is going to have a big pop, and that's exactly what happens. So, in spirit of bull flag pattern, we go right into the 20, pierce the 20, and that's your catalyst. That's like lighting a fuse right there. That's how I kind of talk about it, as lighting a fuse to a, dynamite strip or whatever it may be, and sure enough, you blast off hardcore with a 1, 2, 3 bar surge to the upside in mega proportions all the way into that 200 moving average. Now, obviously, the 200 is going to stall it out, right? I mean, we know that in the very least. You have the 50 getting hit already over here, so the 50 is not going to be that much resistance in this area, especially off of a bull flag in spirit of play, which is going to blast off so sharply. But once you get all the way up to that 200, that's where you're going to stall out. That's where your shorting opportunity is, and on a pierce right here of your 200, you take that short and you get a nice scalp move back to the downside. All right, again, just knowing that, that's what you're doing there. Now, what you're seeing going on now is bullish consolidation beginning again. Now, this time it's below the 200 moving average. Here it was above the 20, which was a little bit more bullish. Now it's below, so it's not quite as bullish, but it still is bullish overall. And I want to make sure everyone's aware of that. You still have bullish consolidation here, folks. It's maybe not as bullish. If this was a 90% success rate move to the upside coming, this is probably more along the lines of a 70%, 75% move to the upside in that kind of key there, all right? So that's what we're seeing here on the SPY with the markets trading up across the board. Now, why did the markets make a move up? I mean, yeah, you had the bullish pattern which told you it was going to happen, but the real answer to this is looking at the dollar. The dollar over the last few days has had a monstrous move to the upside. All right, now if we go out to and zoom out here the last few days, look at this move from $20.84 all the way up to a pivot high of 21.55 today. That is a huge move. You do not see moves like that in currencies very often, especially not the dollar. But this was one of the meteoric moves up in the market or in the dollar chart, which again did put pressure to the downside on the markets. Always remember, the dollar trades inverse to the market. So if the dollar is going up, markets are usually under a little bit of pressure. And if the dollar is going down, markets are usually rallying. Well, let's see if that kind of concludes our overall thesis from what we're seeing here on the dollar chart. Well, over the last few days, the dollar's gone up. Did the markets fall last week? Yes, they did. Now, intraday, we just saw a surge up in the markets over the last hour, 2 hours, right? Did the dollar fall? The answer is yes. So see how the dollar falls there, and that's why, again, if we flip back to the SPY chart, you can clearly see the market breaking to the upside over the last couple hours as well. It coincides perfectly, folks. You cannot ask for a better coinciding chart in the opposite direction than the dollar and the markets. And again, when we look at the SPY, always remember you're looking at the S&P 500 tracking ETF. Okay? So definitely keep an eye on that. Going back to the dollar chart here, folks, and again, let me just zoom out a little bit here and go back in. You can clearly see initially the dollar's up. That's why the markets really couldn't get a bid early on. But as soon as the dollar tops out and starts pulling back, that's when we start shooting to the upside. All right, and again, you can take a look at the euro. I actually wrote a little bit of an article on the euro saying that you would probably buy it for a bounce. And the reason why you could buy the euro for a bounce was because on the daily chart, it had tagged at the time of the article the 50 moving average. And sure enough, look at that bounce on the 50 moving average there. Beautiful thing right there. All right, so just recognize the charts, guys. This chart was telling you there was a decent chance of a bounce. You have a 1, 2, 3 bar surge to the downside, a little bit of a lower tick into major support of the 50 moving average, and ultimately you get a little bit of a bounce here. I think this does bounce for another day or two before it probably goes lower. Ultimately, the dollar has put in a low now, the euro has put in a high, and bounces on the euro can be shorted and pullbacks on the dollar can be bought. You just want to make sure your entries are appropriate. I would say if the euro bounces back to this area right here, the 20 moving average, and this little area, that would probably be your position to go short the euro, not before then. Okay? Now, in terms of the dollar pulling back a little bit today from those high levels that it was this morning early on, key moves in the USO are occurring. Major bounce here in the USO to the upside, up $1.11 on the USO. That's a huge move. SLV is having an equally big percentage move, if not a little bigger, up $2.08. Look at this ginormous move. And again, interesting to note that the SLV came right into this area. See this little gap fill consolidation area right in here? That's where it came, and now it's having a huge monstrous bounce to the upside. Basically $3 off the lows of trading. On Friday morning, this was as low as 32 and change. And now it's back to 36. So, I mean, it's just had a huge bounce. I do think it probably goes back here. 50 moving average and gap fill right in this area, right around 38 to 39 bucks is probably where this SLV is headed. After that, it'll be tough to know if it goes a little bit higher or not. All right, so again, that's the SLV. The GLD here on my real tick chart, folks, you can clearly see it's having a monstrous second day bounce. You can see Friday it also had a bounce all the way up here after closing. I would have preferred to have seen it hit the 50 moving average. If it hit the 50 moving average, that would have been a no-brainer buy in my opinion. It didn't quite get there and it bounced anyways, so you just move on and move on to the next play. There are always trades out there. For the Research Center, folks, join, take the 7-day free trial. If you want the chat room, take the 7-day free trial. Join because we are making money hand over fist. In fact, I did a No Hype Live 1-hour broadcast last night. I showed my charts. I answered questions from Research Center members. It was a fantastic evening there, and we're going to do more of those more often. So be ready for those and join the Research Center to get involved and do those. All right, guys? Good stuff. Now let's just take a look at a couple different charts. As we know, commodities are bouncing. What's the logical thought process on stocks like ExxonMobil and Chevron? Chances are they're going to bounce, right? Well, Exxon's up about 22 cents today, getting a little bit of a bounce, as you can see. A little bullish consolidation going on here as well, with the 20 just about to cross the 50. That actually bodes well for it later today as well. Chevron's also having a very solid day, up about 65 cents, although it is coming off the highs of the day just a tiny bit. All right, so that's what we're seeing on Chevron right now. And Exxon, those are both having good bounces. Let's take a look at a couple others. ConocoPhillips up 57 cents. Nice move there. Some other ones as well. Freeport-McMoRan up $1. That's another commodity, copper and gold play. So you can see the commodities, which had been crushed last week and took the market down, are now getting a solid bounce. Technology-wise, what's going on in tech land? Apple Computer up 90 cents on the day, although that is pulling in off the highs. Small gain there. The real leader today is Amazon. Amazon.com up almost $4. That is a tremendous move to the upside. And again, I do think Amazon is probably heading for the $210 level before it really stalls out and comes back in. All right. So we will watch that very, very closely as well. Let me just scan through my watch list here. Research in Motion is down $1.15. Now, Research in Motion does have a buy level for a swing trade down here. I don't want to just give it to you guys right now. If it gets down to this level, that is your swing trade level on Research in Motion. See how perfect that little pivot low would be? You're only about $2, actually less than $2 away from that level. So be ready. If it gets there, that's going to be your buy. And remember, I release the live plays. As I trade, I give out the swing trades in the Research Center. I give out alerts every night in the Research Center, hot charts and alerts, pro trader watch list. We do the No Hype Live broadcast. There's nightly videos. I mean, it is just an impressive thing, all for $49.99. Plus, you have the free trial to test it out before you even commit. So I encourage you to go to the Research Center and just check it out and subscribe to the free trial. Chat room's also awesome if you can have a little time intraday to pop in, ask any questions you want. And again, that's what we're here for. All right, financial wise, let's take a look at financials. Financials continue to be weak. Look at that chart on Goldman Sachs. I mean, that is not a pretty chart. I mean, going back to the beginning of 2011, it has just gone basically straight down with sharp bounces along the way. But I am not liking the chart on Goldman. JP Morgan is trading down as well. And for the market that's pretty strong today, financials continue to be laggards. I do have a buy level on Goldman. Let's go back to it. What's your buy level on Goldman here? And I'm going to give it to you right now. Your buy level on Goldman's right down here. It still has a ways to go. I would not touch this as a swing trade until it at least gets down to there. If it gets there, then there's a couple more supports down here as well, but it would start to get attractive in this range right around the 144-ish area, 143-ish area. All right. Let's go back to the dollar. Take a look at the dollar here. The dollar continues to hold off the highs of the day, although kind of going sideways now, which makes sense, right? Think about what I just said to you guys before. I said, when the dollar goes up, markets go down. When the dollar goes down, market goes up. What happens when the dollar goes sideways? What's the logical conclusion of a dollar that's going sideways? The markets would go sideways too, right? Because it's equal. Let's take a look. And that's exactly what you're seeing here. Sideways move on the SPY as the dollar just goes sideways. So it's very, very clear, folks. Markets are doing the exact opposite of the dollar. The dollar is in charge. It will can remain in charge. It's up to us to trade stocks, find levels, and that's what we're doing in the intraday stock chat in the research center. So come join us here at inthemoneystocks.com and enjoy. Take care, folks. We'll be profiting.